Markets finished a little mixed today with not much news. We're going to take a look at what's going on. Goldman Sachs came out and said they made less money. Its worst earnings miss in a decade as revenue shares fall while expenses rise. Guess what expenses those are? Bonuses, perks, salaries. So we have bank earnings out this week, so it'll be interesting to see what the rest of the banks are showing. But that had an effect on the Dow, down 1.14%. S&P only down 0.2. NASDAQ finished basically flat. So it was the bank sector as we have more bank earnings coming out. So the thinking is the rest of the banks are going to be under pressure as well. Bonds popped a little bit on all that. So no other major news to be looking at right now. We're still waiting for more earnings to come out. And also Lael Brainerd, the Fed Reserve number 2, is going to be speaking on Thursday, and she is typically on the dovish side of the Fed. So if she comes out hawkish and talking about, higher for longer and inflation's still too high and the Fed is committed, which she probably will, that's the thinking, then markets will continue their descent when that happens. So all we can do is wait and see. Here's the Dow right here, kind of putting in a double top here on this latest rally and reversing trend. And the expectation is to come back to this trend line here, check it, and see if it'll hold it as support and maybe just kind of creep its way down or break through and go down and set a new low and take out this October low. And again, it all depends on what the Fed says, what their response is to the inflation report, and what recession watch looks like as we get through earnings season here. So this is going to take its time playing out. NASDAQ, not quite to the trend yet where it's rejected each time to put in a new low. Will it make it there? Not much further to go from here. So the likelihood is pretty good that it will. S&P broke trend just like it did over here and here, just like it kind of did here. So we'll see if it finds support after this retracement here, or if it's going to continue on from there, like the Dow finds support on that trend line or break it, go down and take out this October low. So nobody knows exactly what the markets are going to do, but the Fed's higher for longer and something else pops up from under the surface out there, it's very likely that that would be the case. And this is set on the close. If we move this to the wicks, then the trend probably has stayed under the most recent price action there. But, I like to use the closes, especially in traditional markets, because it makes a lot more sense there. Here's the VIX continuing its march down, finding a little bit of support there and bouncing back up from that 18 level up to a 20. So when the VIX gets this low, it's generally going to pop and spike back into the 30s, eventually potentially getting into the 50 range. This is the March 2020, when the VIX spikes up into the 80s. Those are big, bad moments in time when that happens. This is 2008 and 9. In the 80s, but the 50s, that's kind of a more regular occurrence when the VIX will spike into the 50, and then you'll see some new lows and major lows put in the market. But here you can see your lows back in, or your VIX back in October was only at 34. So it's visited this 34 level quite a bit here since the market started its decline last year. So the potential is the VIX is going to probably, in likelihood probabilities, retest this 34 level to see if we get a 50 out of the VIX and a big market event and put a bottom in the markets. So let's take a look at Dixie here. Dixie finding a little bit of support right here in this area, did not take out this last low in May. So we'll see if the Dixie is going to reverse as markets continue their decline as we get through earnings season and Fed response. Here's the 10-year finding support, broke the trend line, came back above it. So we'll see if it'll support this trend line and continue its reversal, or if it's going to roll over. Ultimately what could potentially happen is the dollar down, treasury down, markets down. That's when you have a serious problem going on. Right now, it's just liquidity rotating in and out of treasuries and into the markets. So let's take a look at Bitcoin here. So Fibonacci. So the Fibonacci levels are interesting. I did that video with Gareth Soloway the other day, and he talked about this level here. Bitcoin popped up briefly above it, but could not hold it. If we look at this on the 4-hour, you can see it a little better. I mean, just briefly poked its head above. And if you look at it on the hourly, literally on the hour, just poked its head above on earlier today, and then, has not been able to get, but just, a rising hourly flag here. So what's interesting about Fibonacci levels is that you can see how important they are, right? So this is a retracement level. So price dropped to the bottom here, and then you retrace it back to the top. So typically price will return to that 382 level, maybe the 0.5 level, and then find support to move on if the trend is going to continue. If it breaks, these levels, obviously it returns back down to the ultimate trend here before that can break and find a new low. The question is, what is this all about? Obviously, this is short covering, liquidation, right here, just liquidations, exit liquidity, things like that. And there's a lot of, price manipulation going on out there. And in terms of what's happening. So when you look at Bitcoin, Ethereum, there's XRP, Cardano. I mean, when the entire market looks, exactly the same pretty much, with the exception of maybe one or two, but pretty much all your major alts and everything else is kind of looking almost exactly the same. You got to kind of question that activity. So let's take a look at this. What level that's your retracement on the Fibonacci. So let's look at what level it rejected. Obviously, that's the 100% level, but it did have some stops along the way. And this is what's interesting about Fibonacci's. Generally this 618, your first level, where it found a little rejection, then broke through to that 702, found a little support, broke through the 786, and that's generally when you've got some continuation, but could not break this prior range high. There's a lot of selling going on right here, where people were betting on this area being the bottom with that 17.5 low back in June and a $25,000 high. So, I mean, there's potential before this rolls over that the price could pop up here and test that $25,000 level. Now that it's, finding a little bit of support in this level, if it can find support on that $20,000, $21,000 level, it could potentially pop up and test 25 before rolling over and going back down and testing this trend. So a lot of people are out calling the bottom is in again, just like they were right here. The same people, calling bottom is in, bottom is in. And again, the bottom is not in until the Fed says the bottom's in and inflation is down. That's when the bottom is in. It just isn't going to happen. It can't happen until we know that inflation's under control and the Fed calls the ball. The Fed says, the bottom is in. Will Bitcoin drop to 9,000? Will crypto drop another 90%? Will the stock markets go down to new lows? It really is going to depend on, will inflation come down fast enough this year for the Fed to be able to stop hiking? They're going to slow the pace potentially at the next meeting as we get closer. And based on what, Lael Brainerd says on Thursday, we'll have a really good indication of what they're looking at for a rate hike, whether it's going to be 50 or 25. If it's 50, markets are going to take a big leg down. If it's 25, they might react to that in their talk of higher for longer. But until they're done, until the Fed stops, and we know that inflation is under control and the recession concerns or deep recession concerns have taken off the table, you really can't look for a bottom to be put in the markets yet, especially without retesting those October lows on most markets, so on most indexes. So that's kind of what I'm looking at, and I'll see you on the next video.